Welcome back. You're watching Market Sense. Well, stocks on Wall Street were mixed at late afternoon, while European markets were trading lower, and stocks on the JSE were mainly high at the close of business today. While our market specialist Arabile Gumede spoke to Warwick Lucas of Galileo Capital on some market developments.
Interestingly enough, we see a big 0.75% uptick in the all share. What's driving that?
Well, it looks like weak rand is largely coming through there. I guess that's one of our big drivers on the JSE quite often. A little bit of reversion as well. We tend to find a Friday reversion when we're having generally weak environment, which is probably described most of this year. So yeah, a little cocktail of factors there.
Taking in some positions just before the weekend, I suppose that's what that is. The rand's recent trading movement as well has been quite interesting, losing about 2% yesterday. It wasn't really just the fact that the South African Reserve Bank decided to hold interest rates, was it?
Well, I suspect that it had been part of it. I mean, it's quite bizarre that the market thought it was necessary for SARB to hike. I mean, it certainly isn't. I mean, the economy really is really quite weak, and extraneous factors are leaning hard against commodities at the moment. So, I mean, that certainly would keep the economy on the back foot. I mean, I guess the only key concern is, well, would the weak rand lead to inflation? Possibly it could, but I mean that certainly doesn't precipitate need for hikes by SARB at this stage.
Speaking about a weak economy, seeing growth downgraded by the Reserve Bank from 1.7 to 1.2%, that's a big factor to look at. Not so optimistic now about South Africa's prospects for this year.
I guess a little bit concerned about where the whole trade fight could go. I mean, we are a quite substantially commodity economy, and it's very much a niche part of the whole global economy. I mean, you know, trade and manufacturing go hand in hand, and yet manufacturing is only about 15% of the whole global economy, but it's going to be a key input there quite clearly as commodities. So you know, if global trade catches cold, South Africa does certainly get a very bad flu.
Yeah. Do you expect further weakness for the rand in the coming weeks?
I would hope not. No, and I'll say why. My big concern here is that there's a risk here of policy error from the Fed, and the reason for that is if we look, for example, things like the yield curve, which is the difference between long and dated and short dated bonds. I mean, that's flattening quite hard. We've seen the gold price. I mean, that's quite firmly on a weak footing now, down to where it is, and we're seeing that in other precious metals as well. So there's no fear of inflation. Then even looking at the Fed's forecasts as well, they're not looking for inflation either. So if anything, there's a danger here that the Fed is actually being too aggressive with monetary policy, and that it's actually not necessary, but it could actually cause growth to roll over.
But at the same time, it does make them an attractive market in comparison to us, who've left our interest rates unchanged, and they now have a stance where, you know, the rest of the world is looking at them going, well, I might as well get a better yield, or a yield out of that in a secure market.
That's the dynamic, is that it's good for monetary instruments, good for deposits and so on, not necessarily so good for the economy here. So I think there's actually some merit to Trump's comments about the Fed. I think these extraneous factors that I've touched on there are starting to suggest, yes, maybe they do need to just take a foot off a bit.
What would you be able to do with 3.9 billion rand? Christoph Wiese and that tax allegation or tax fraud and that entire situation, that's bound to hurt in some way. Whether he comes out clean from it or owing a whole lot less out of it, it's bound to hurt his credibility and certainly his interests in the country as well.
Yeah, I mean, it's a bit of a curious case, because the nuts and bolts of it appear to be that he purchased a shell that had an assessed loss, but I mean, when you buy an assessed loss, it also is important that whatever activity goes into that shell should match up what happened before, and clearly there wasn't a match here. So I'm a bit at a loss, because to me that's almost a schoolboy type of error.
Yeah, it would be weird actually to really say, and hopefully we'll get more details as sort of the weeks go on as well with regards to that. EOH getting a new CEO as well. Mr. Van Coller leaving MTN and now headed to EOH. A good move on EOH's part, do you think?
Yeah, quite necessary. I mean, I've been quoted in the past when executive compensation comes in. I mean, it sounds like the last package he was on at MTN was probably the same cost as the whole EOH board. And I've noted before, you know, if you think a pricey executive is bad, just try an incompetent one. And we've seen quite bad missteps by EOH management in the time between December and June. And I think with Mr. Van Coller's background, both in finance and in telecoms, which are key offtake points for IT firms, I think that's quite an interesting appointment and could be a bit of a company changer.
Yeah. So you reckon it would help them?
Very much so, very much so. I think it's a constructive move, yeah.
Finally, trade war fears, that continues to be a bugbear and an issue around the world that continues to escalate further. Now Europe getting involved in some way as well. Yeah,
I mean, look, it's going to change the dynamic. I mean, the interesting one for China as well, the US exports are actually only 3% of the GDP, so possibly the risk could be overstated in some areas. In terms of Europe, it's a different one because they run a more balanced profile than the US. However, this is where we start touching on the soft issues around trade, namely not what are your rules and what are the percentages of your tariffs, etc., but how do you actually consult yourself? And let's bear in mind that most of the trade framework around the world is pretty much working along a 1980s GATT agreements and so on. They're actually due for quite a bit of an update.
All right, let's see how the JSE ended. Not a bad end to the week. The all-share index up more than 1%, and the rand fell quite significantly yesterday against the dollar, mainly perhaps because of that lower growth forecast for the year coming out of the Reserve Bank decision on interest rates, even though those rates were unchanged as expected. Today, recovering up 1% at one point, now about 0.5% stronger against the dollar. Let's take a look at your main financial indicators.
With your business news, National Treasury Deputy Director General Esma Momoniat has come out strongly against the financial services sector.
Momoniat has said the financial services sector is good at making money for itself and not its clients. He was speaking at the ABSIP 3rd Investment Management Summit in Rosebank.
National Treasury Deputy DG Ismail Momoniat says the financial sector has been driven by high charges, which erode a client return on investment, adding that the sector is not transparent. Momoniat used VBS as an example of how the financial sector has made money for itself and not its clients. He said the mutual bank has robbed poor South Africans under the guise of BEE. Momoniat says asset managers should always remember that they are custodians of the funds invested with them, adding that he hopes the Twin Peaks regulatory framework will help hold the sector accountable.
With Twin Peaks coming into being on the 1st of April this year, and the establishment of the prudential regulator on the one hand and the conduct regulator on the other, that I hope the conduct regulator is going to be tough on you guys. Damn tough on you, okay? They're going to bat damn hard to make sure that you act in the interests of the savers and not merely of yourself.
Momoniat says asset managers have a critical role to play in reviving the economy and achieving inclusive growth. He says asset managers can help restore investor confidence in the country, adding that they should also look at investing more in South African businesses.
They can help to build confidence into the economy by putting funds into key investment vehicles which kind of play a role in the economy, be they state-owned entities, and of course I'm talking of well-managed state-owned entities. They're not going to put And now that the climate has changed, I think looking at other capital projects, because you need higher capital investment if you want to improve the growth potential of the economy.
Momoniat says BEE and transformation are important to achieve inclusive growth. However, in the past, radical economic transformation has been used as an excuse to loot for the Gupta family. Balentle Mteto, SABC News, Johannesburg.
All right, so a busy week on the economic scene. That brings us to the end of Market Sense, but we'll be back.
Definitely more headlines, news and updates coming up at the next hour at 7 p.m. See you there.